So welcome to Music and Money Talks. Music and money are just foundational aspects in our lives as presenters because we're both musicians and we both work in money. It's foundational to you as artists or artist business, and foundational to our audience, who we want them to have enough money to be able to support our business. So it's all a great big circle. And so the original format for today was going to be three of us, and I started looking at it as a progression from, you know, sometimes some of us are in crisis and we need some support, and then getting to the point where we are able to make some money, and then how do we work with that money, what are the smart things we can do with that money, and then to where Ian comes in, where, you know, you're making enough money that you're paying taxes, and that's a good thing. You want to be able to, if you're paying taxes, that means you're making money, right? Bottom line. Unfortunately, Marianne Elder, she's the managing assistant to the board of Elephant Artist Relief Society. She wasn't able to make it today, so I'm just going to read some things that I found from the website. Actually, Colleen Kruger, who's the executive director of Music Calgary, is also on the board of EAR. And so EAR is the Elephant Artist Relief Society. It was formed when a group came together to help a fellow artist who was going through a medical crisis in 2007. And this event created an awareness in the community of Calgary that there's no urgent supports for people going through this hardship. And you know, in the creative community, forming a society has allowed them to establish a last resort relief fund. It's up to $2,500 if you go onto the site, and to meet this broader need of whatever crisis that an artist is in at the time. It's a very unique service. There's no other agency that is duplicating this kind of support for all of the creative arts in Calgary. So they're a registered charity, so they also accept donations, and we were talking to this group here, fella, that they're starting a new organization as well, and maybe just speak to that for a moment. Your
Yes.
New company?
So hi, I'm Mackenzie Walsh, this is Quinn LeBlanc, and we're with Empowering Artists. It was Empowering Minds before, switched over in September, and our focus is supporting independent Canadian musicians from all stages in their career and all walks of life throughout Canada. Sort of our launching point is Calgary.
Good.
Yeah.
Well, and then you're getting into being a charitable organization.
Yes, we are a charity.
Right. So then, you know, you do want people to donate to your charitable organization, and I was just mentioning that there was an article last month that says that Alberta is the only province in Canada that offers a maximum deduction for donations up to $200. You know, so that's something that we can encourage, you know, our donators. So EAR is a registered charity, and they're offering practical resources. For example, there's a group health benefits plan. Like that's really yes, right? So this society provides financial and career support. Sounds like it's much what you guys are doing, but in a different way. They've been around for 15 years, and artists have come to depend on EAR to always be there. They were a major support to artists during the floods in 2013, and then again in the pandemic. So go online and just do a Google search for elephantartistrelief.com and read up on there. So please welcome my fellow panelist, Ian Arnaud. Ian is a candidate, an accountant, and a CPA candidate with St. Arnaud, Pinsent, Stemmen Chartered Accountants in Edmonton, and works with his father, who is a founding partner of that firm, and Ian's been practicing since 2021. He's also a tenured touring artist, recording artist, under his own moniker, an indie folk rock group called St. Arnaud, and his bandmates live in Calgary. So Ian brings a really broad range of expertise to this niche skill set, and working with offering tax and planning services to a wide range of clientele, including artists of all disciplines, indie record labels, freelance professionals, and operating within the arts. So thank you, Ian, for helping me out here. I'm Melanie Cheek. I've been a licensed financial advisor for 10 years. I'm based out of Edmonton area. I consider myself a serial entrepreneur though, having built and owned a music business called Spirit River Distribution for 14 years. We worked with independent artists right across the prairies, and we shipped CDs to record stores across Canada and into the United States until 2009, when we were forced out of business by a digital music scene. But closing down that company gave me an opportunity to focus on my own music. And so our family band, Off the Rails, has been performing around central Alberta for the last 12 years. And at this point, I do want to ask the question, how many of you are earning your full income from music or in the arts full-time? Okay. How many of you are working a job to support your career in the arts? Okay, so we've got a pretty good mix of both. That just gives us a little bit of, how to lean on this. So today I'm going to be talking about money and how it impacts our lives. And it's not, to me, it's not about being rich and buying the fancy houses and the fancy cars. And I mean, but that's nice if you can, but that's not really what it's all about for me. It's more about what you can do with money. It's for your health, whether it's your physical health, your mental health. It's about supporting a lifestyle that you are happy with, building your business, supporting your family, and being able to contribute back to the community. And having enough money to be able to share it with others, because like I said at the very beginning, it's all a big circle. And it's healthy to be wealthy. And that's a mindset that it took me a really, really long time to overcome, because I grew up the oldest child, 7 kids, small family farm, where it was just almost, I don't know, and then the whole church thing about, money is bad and all of those beliefs that I grew up with, thinking, well, gee, you're envying somebody who has money. There's always some negative feelings around that. And it took me a long time to really switch my mindset, because I did find myself in crisis. When I started this Spirit River Distribution, I was a single mom at the time, and I had a part-time job to support my music business, but I was waking up in the middle of the night with panic attacks. I was, diagnosed with fibromyalgia. I was making myself sick because it was worry and want, and worry and want, and worry and want. And until somebody gave me a book, and I really started to shift. It was a shift in me that, okay, I'm creating my own crisis here. I am creating my own circumstances, and I have to change that. And I stop blaming my upbringing, stop blaming whatever, and think, okay, I have to educate myself. I'm the problem. I have to fix this problem and start educating myself on that. So it's taken me a long time. I was really late in fine-tuning my money habits, but that's why I love to share it now, is because I have built myself up to a place where I'm building my own entrepreneur's pension plan. I do have a house that I love, and I'm still being able to do music. And so it's that mind shift that I want to impart, and then some tools as well. So, and this is a quote that I share this. It's out of the States. Her name has just escaped me at the moment. But it's the foundation for how I work with my clients. You will never be powerful in life until you are powerful over your money. How you think about it, how you feel about it, and how you invest it. So that's where I come in, talking about how you think about it and feel about it, but also how you invest it. So today's I'm going to talk about, focus on 2 things: growing your money and protecting your money. So you're going to saving it, growing it, saving it, and protecting what you've got. Or it's page 3. The first skill set I had to learn was saving it. I was great at spending money. When I landed in Calgary at age 18, I had no education in budgeting or credit cards. I took the first job I could find, and then I found the Bay. They had records for sale at the top of the escalator every Saturday morning for like $2, $3. The first album I ever bought was Janis Joplin, Pearl, and I was hooked. I had a great record collection, but I was also hooked on retail credit cards. And so that got me in a pretty big mess of trouble. So learning how to save money. When you've earned enough to cover the basics, for as little as $25 a month. If any of you smoke, or I drink wine. I mean, it's like $25 is, it's a really nice bottle of wine. But for $25 a month, you can start a tax-free savings account. And how many of you know what a tax-free savings account is and how they work? Okay, it was introduced in 2009. It's really the only thing that the government has given us in all this time in order to be able to grow money tax-free and take it out tax-free. It's a tool. Right, let's take the emotion out of it. It's a tool. Use it as a tool. Start at $25 a month or $50 a month or whatever you can afford, but it's a start, and that's going to give you that shift in your whole, I'm taking care of myself. I'm going to take care of my family. I'm going to take care of my friends by having this, because you can designate beneficiaries to a tax-free savings account. I always recommend you have two, because the first thing you want to start saving for is your emergency fund. The van breaks down on the highway. You've had some canceled gigs. COVID was a huge example of that. Maybe you become injured or ill and you're not able to work. Are you financing your life on credit cards? Or are you going to sock away a few $1,000s in an emergency fund? And the second one, tax-free savings account, you can have as many as you want, as long as you don't exceed the maximum, and it's at $88,000 right now, so I think you're safe. I certainly am. I still haven't reached that maximum. Have a number two, and that's your first one, your emergency fund, is your short-term savings investment. Your second one, long-term. Think long-term. Think, yes, you want to do music for the rest of your life or the arts or whatever it is, but do you want also an alternative revenue stream to come in and help you to be able to do that when you're older, instead of having that other job that you're doing just to support your art? So think long-term, open up a second tax-free savings account, whatever you can put in there. The trick is knowing what you're invested in. You might have a tax-free savings account. Do you have one? Who has a tax-free savings account in the room? Do you know what you're invested in that tax-free savings account? You do? Perfect. Myself. Good. I talk to a lot of people who don't. They say, well, I don't know. And so I take a look at their statement, and it's sitting in a money market account. A money market. So you're not taking full advantage of that tax-free savings account. You should be watching it yourself, or working with a financial advisor that you can talk to, and you should be looking at it every 3 to 6 months, looking at it a minimum once a year. Okay, it's not working for me, it's not building. I know somebody, my CPA friend in Edmonton, her son built his to $1 million. That's tax-free. Now I'm a little bit more conservative with my clients. He's been doing you can have stocks in a tax-free savings account. It's tax-free. There's a lot of marketing around RRSPs. I think there's a little more marketing around putting your money into an RRSP to get the tax break. My standard is this. If you're making less than $60,000 a year, you might disagree with me on this, but if you're making less than $60,000 a year, you're wasting your tax break by putting your money into an RRSP at that point. If you're over 60, you're at 80,000 or 100,000, then sure, that RRSP is going to give you a tax break. But you're better off under 60,000 putting your money in a tax-free savings account, because you might get the tax break now, but taxes never go down. When you take that money out of that RRSP, you're paying tax on it. So there's two different instruments for different times of your life and for whatever income you're in. And I want to talk a little bit about the brand new program that the feds came out with this spring, and it's called the FHSA, all these acronyms. It's the First Home Savings Account. So the First Home Savings Account, they announced it in the spring, and then none of the financial services companies were prepared. Like, nobody had the paperwork, nobody had the infrastructure to do this. They're like, oh, the government says people are going to First Home Savings Account. What they've done is they've married two things. There you get the tax break, like an RRSP, when you put the money in, and then you can take it out tax-free. the intent is to put money in there to save up for a down payment on a house. But that shouldn't stop you. Even if you're no intention of buying a house, you know you're going to rent because you're moving around the world. You know that one of my mentors in Edmonton said, use it anyway. Use that first home savings account anyway, because you get the tax break. You can take that money out and you get taxed on it, or you can roll it over into an RRSP. But take advantage of the tax-free growth in it. So you've built your music business and you're saving some money. Now I want to talk to you about how you're protecting that money. For those that you should left behind. I mean, nobody wants to have this conversation. You know, it's a really tough conversation to have, but what happens if something happens to you, the unexpected happens to you, and you pass away, you know, unexpectedly? Have you put aside anything or spent your money on anything that's going to protect your family? And that's where I start talking about life insurance. And that's the hard conversation. Nobody wants to talk about dying, and most people don't want to talk about life insurance. But I'm going to take the emotion out of it again. It's again, you look at it as a tool. You're buying money at a discount. Rarely, if ever, are your premiums going to cost as much as the amount that your family's going to get, or whoever you decide to give it to, beneficiary to, than what they receive. So for an example, I just did a quick quote, 25-year-old male, for less than $20 a month, you can cover your life for $250,000 for 20 years. And that premium doesn't change in 20 years. For a female, it's $16 a month if you're 25. So you may think to yourself, well, I don't have kids, I don't have anybody to leave this to, but what about your parents? What about the people in your community that have supported you in building up your music business? What about giving back to the community? It could be a charity. You can will your life insurance to a charity, and then your estate gets that tax receipt. So there's two kinds of life insurance no matter where you go. There's term life insurance, but that's exactly what it means. It's for a term. It's for a set amount of time. Your premium stays the same for a set amount of time. It's temporary. It's for those the big risk of the what if something happens while I have a mortgage, I have student loans, I got, car payments. It's for what if something happens, and it covers you for whatever period you want to pick for that length of that loan. It's temporary. You cancel it when you don't need it anymore if you have permanent insurance. So that's the second one. There's term or permanent. Permanent insurance, it costs more, but it's actually like an investment. It grows. Like this is when you're in, you're in. It depends on your age, whether you're male or female. But if you start with it small, it grows over time. There's cash value in it that grows, and the death benefit grows, and it lasts to age 100. Term insurance is only the length of time that you buy it for. It's like renting. But a permanent insurance is owning it. You own it. You can grow it. You can borrow from it. You can use it as collateral at the bank. It's considered an asset. My nephew borrowed money from his permanent policy. The company owned it. So corporate life insurance, your business, you can have corporate life insurance to protect you as a key man. They borrowed money out of the permanent policy to finance a new product line that was coming in because they didn't have the cash. They borrowed money from it. 2 years later, they built enough cash value inside the policy to pay off the loan. You can use it as a tool. So you're buying money at a discount. That's about it for me. I don't know if I ran over time or anything, but I just want to just emphasize that, to save the money for your future, and then spend some money on some protection that you can leave some behind and paying it forward. Does anybody have any questions right now?
We'll have more time at the end too
Yeah,
for
we will have
questions.
time at
So
the end.
yeah,
Yeah.
for sure do a couple.
So you were talking about the tax-free savings, like what would be an amount that would be appropriate to approach a financial advisor to get advice on?
$25 a month.
No,
Seriously. Or anything up to, the maximum is $88,000. So you could, if you had, an inheritance and you wanted to put $70,000 into it, you could put $70,000 into it right away. Any amount up from $25 a month. or $500 for a one-time. Right, so 500, that's the answer to that question, yeah. Yes,
Because I'm not 18, I can't open a tax-free savings account.
right.
Could I ask my parents to open a separate one from theirs so I can?
You can, yes, and then have that agreement, yes. And then you be the beneficiary of it. Yes, you can, definitely, yeah. Okay, thanks. I'm going to turn the floor over to Ian and to talk about tax. Thank you.
Hey,
I have some handouts up here too, by the way.
yes.
Yeah, there's handouts, business cards, whatever.
Stickers?
Sign up for
Stickers?
my stickers. No, and if you
Life
want,
insurance
see,
stickers.
I'm not a, I am not a fee for service advisor. The insurance companies pay me, so free information, I'd love to help people. So if you want to sign up, just to have an email chat, just.
Hey, I'm Ian Arnaud. I am an accountant, which is a relatively new development in my life. As Melanie mentioned, I'm an artist as well. Started there. I went to university for science. I thought I'd do that. Then I was doing music and serving, as lots of us do. And then COVID hit, couldn't find work, and I was sick of sitting around. Serb was great, and I said, I can't do anything. I hated making the call. Dad, can I please come answer phones? Can I do something? And he goes, I'll show you how to do personal tax returns. Okay, bummer. And we were working on our second album at the time, and my producer was down here in Calgary, and my bandmates are down in Calgary, so I'm here a lot. And I was talking to my producer, and he goes, you idiot, this is a great idea. He's like, there's like 5 music accountants in Canada, or Western Canada, and they're all 70 years old. He's like, do that. He's like, these people. He's like, you can talk to them. It's a trade you learn beyond that. And here I am. So yeah, I've been doing it about 3 years now. I am a CPA candidate, so I don't have my designation yet, but about 1.5 years from now I will. And so I want to talk to you a little bit about what I know, and please try to stump me on something complex. I might not have the answer, but a lot of what we do is I'll get back to you and we'll figure it out together. Basically speaking, sole proprietors, corporations, that's the 2 worlds we're talking about. I wanted to talk today about sole proprietorships. I'm going to out anybody here. Does anybody not know what a sole proprietorship? Have they not heard that term?
I've heard it, but I don't fully understand.
Okay, fair enough. This is good. So sole proprietorship, you are probably already one if you're here. It's basically you are the business. If you haven't gone and incorporated a business, which you'd probably know if you did that, you're a sole proprietor. If you're selling something, if you're collecting money for a service, performing, doing PR, selling knit things on Etsy, whatever you're here for, you're a sole proprietor. That has tax consequences. It's not necessarily bad, but you got to know this because it can be something that could get you into trouble one day. You could be owing tax, or you could be missing out on benefits that could help you. So basically, it's not that complicated. And I'm not here to sell you on me so much as I am to arm you a little bit. You can do this yourself. Accountants aren't like the brick wall between you and the government. Do this yourself. This is cool. But you got to know what to do, so I'll tell you a little bit. Basically, if you are that sole proprietor, if you are the business, there's one form you got to know. Write this down if you got a pen. T2125. One form. Very important form for you. That's the Statement of Business or Professional Activities. That's where you, the person, the tax return, the business, go. So I'm like, okay, sole proprietor, sole, alone. What if I have bandmates? What if I have business partners? I know the group that left here, they're a corporation, so that's different. They have maybe different shareholders, maybe different directors. What if your business is a band? You got your DJ, right? Maybe you're 50-50 in on it. You're probably still a sole proprietor. You might think, well, I've heard partnership, that's a thing. Yeah, it's more of a legal thing than it is a tax thing. You can file with your taxes a partnership information return. You're basically just telling them you're a partnership. You still are a sole proprietor. You still fill out that form. You just split it. You write down, okay, Tiffany's my partner, 50-50. We made this much. Great, I'm an artist, apparently also a business owner. Now what? You have to keep track of your income and expenses. That part's probably pretty obvious. How do I do that, and what counts? So this is terribly, terribly basic, I'm sorry, but like people come to me, they find out I do this, and they're like, taxes aren't real. Like for real, people in this world, in our industry really, really truly believe that. They're like, I don't make enough money, nobody's ever gonna care about this. And yeah, you might fly under the radar. I had somebody come to me, and somebody I'd known a long time, they found out I did this, and they asked for help. They hadn't filed their tax returns in 13 years. They're like 35, they're like a full-on grown adult woman, and I'm like, oh man, like what do we do here? We figured it out. You can't, by the way, you can't file more than 10 years back. They'll just wipe you clear of the record. They're like, you're a bad boy, and just let it go. But you can get in trouble. Like, they can come looking, and they're getting more aggressive. After all this CERB money and everything that came out, which was a great thing. I'm not here to say that wasn't a great thing. They hired a bunch of low-level people at the CRA to come after the people who owe little bits of money. If you're a big corporate whale and you're skirting the system, they're kind of leaving you alone. That's status quo. But they're coming after little babies. If you have a GST return, they're coming after you. Watch out. So, that's not to be scary. So your income, okay, it's basic. You know if you made money, keep track of it. Really keep track of it. Like, you don't need to do anything too crazy. Make an Excel spreadsheet. If you've never worked in Excel, it's blank boxes. Type in the date you earned the money, who you earned the money from, and how much you earned. Just do that, save it, back it up. That's enough for now. Next step up, send your invoices. Keep those invoices, that's all good. Because if you get looked into later, they want to know where it came from, if you're charging the right things. Keep track. One big note, if you work another job and you're an artist, that paycheck you're getting, they are taking tax off every time. I get paid 25 bucks an hour, I worked 4 hours, should be 100 bucks. Why is it 75? It's because they're taking the tax, thank God, for you as you go. If you work for yourself, you got to figure that out yourself. If you make $30,000 at the end of the year, they're going to tax you on that whole $30,000. Nobody said, here's a little bit each time. Hold on to 15% as you go is a good place to start. You're probably going to owe more than that if you didn't incur any expenses, which we'll talk about. So hold on to money. Hold on to a little bit of your money. I know it sounds crazy. Grants are taxable income. Hope you knew that. If you didn't, now you know.
Is there you should probably save about 15% too?
Grants, well, I'll come back to that. I have a little note about that.
I was just joking.
No. That's an awesome question, which I thought of a little bit later, and so I made a point about it. But grants are taxable. Super important. You need to know that. Let's just go to expenses really quick. What counts as an expense? That's a big one. Now, we are in a great wiggly little industry where what we do for business is really kind of ill-defined sometimes. And that can work to your benefit. We're not trying to grease the system, we're not trying to do anything, but for real, what do you have to spend money on to make your business work? Those are your eligible expenses. I bet lots of you work from home, you record your music at home, you write your music at home. Part of your home expenses are things you can write off. So that's a big thing. Your rent, your utilities, the interest on your mortgage, not the principal payment. The list is long. Gas to go to your gigs, right? Your auto insurance, things like that. The list goes on and on. If you have specific questions, feel free to ask in a second. You technically must keep all these receipts for 6 years after you file. Technically. I'm an accountant, and I work with accountants, and we don't want to see every gas receipt you've spent. It's a lot of work. You're going to pay somebody to look at all those gas receipts. You should have them. We don't need to see them, and probably nobody ever needs to see them. But, big but, you need those, because when they come asking, if you can't back that up, they're going to go, okay, you made this much money, and you claim this much in expenses, you can't back these up. All of this is taxed now. Bad. way after the fact. That money's gone. Not good. So yeah, hold on to those receipts. Spreadsheet is good. Little receipts are good. QuickBooks is good. There's so many things, free, cheap ones. Waves, if you want a free one, Waves or Wave accounting. It's not the best, but it's free. QuickBooks, kind of cheap. You can take photos of your receipts. They're all saved on the cloud. Very good. Excel, great. That's all I want to see. Got handouts. Starts with, oh wow, 2 pages of tax tips. Awesome. Do I need to care about GST? Maybe.
I do.
So, okay, you do.
Yes, yes.
Basically, if your business earns more than $30,000, magic number, write that, know that, $30,000 over 12 months. Doesn't have to be January to December. It's 4 consecutive quarters or some other special rules. $30,000, that's the number you need to know. If you've earned selling your vinyl records, playing your shows, writing bios, if you've earned $30,000, you need to tell the government that you did that. So that's when you go and you register for GST. It's simple enough. You can Google it, find it. You go onto the CRA. They get you set up. I won't go into the details of that unless you need that right now. But it's important to know. And what is important once you hit that threshold is they're going to start asking for 5% of all the money you make. That's GST-able anyway, which is most of the stuff you do. So if you're like, okay, I got paid $100 for this sweet coffee house gig, and then I report that as income, the government's going to go, we want $5. Where's that $5 come from? You have to charge it to that client. You got to get good at that. Invoices, you got to know how to do that. And probably lots of you do, but if you don't, do it. Write it on there. You get a GST business number when you set it up. Slap that on the invoice. It's all above board. They can track it. It's all good. Because at the end of the year, or quarter, whatever, when you have to file that GST return, you need to pay that money that you collected. And if you didn't collect it, you still got to pay it. Don't make it come out of your own pocket. The flip side, expenses that you pay, which you're paying expenses, you're probably paying GST on those too. You get to keep track of that, and your spreadsheet can do that. You can just go, this number times 5%, this is the GST I collected. You just keep a tab of that. At the end of the year, you write that, and it goes down against the GST you collected. So I like using this ball. So the GST you collected is here, GST you spent is here. Whichever one's higher, you're either going to pay or you're going to get a refund. And I bet, for me definitely, I'll say I'm not a very profitable artist, you get a refund. It's pretty good, but you got to keep track of it. Tax refund too. This is why you got to know this stuff. So yeah, you can claim GST you spent. It all gets balanced out. Your GST doesn't necessarily line up with the same timing as your personal tax returns. It's all based on when you hit that 30,000 threshold and registered. You can go and change it though. So if you're like, oh shit, like it's July, I hit $30,000, now I gotta pay GST in July and then do my taxes in April. Just go on, you can change it, match it all though. Grants. This is a good one. I had a client, does anybody know what the juried sound recording grant is? The JSR? Yes, some nods. So basically it's the white whale of grants for artists. It's like, depending on how big of an artist you are, it's either $50,000 or $75,000. That would change my life tomorrow, right? That'd be killer. That'd be awesome. Everybody, you should apply for it. Do it. Now, they give you that money, and that's great. But remember, grants are taxable income. So if I'm used to making $20,000 and paying no tax, and then I get this awesome killer grant, I get to go on a tour of my dreams, I get to make this killer record. Hey, we're talking about JSRs. What?
Sorry.
No, we're just talking about grants. Sorry, I didn't mean to single you out. I'm just in a good mood. It's just a fun day.
I guess I'm early for the other.
You're a little early, but that's okay. Stick around. Okay, grants. I'm running out of time. Grants, what happens when you get a grant? Grants are for something. They give you money to spend on something. And I know when you get a grant, Lots of you have probably gotten a grant in the arts. You need to usually report to the grant body. Let's say the Alberta Foundation for the Arts gives you 10 grand. You need to report to them how you're gonna spend and how you did spend that 10 grand. I've gotten grants. They're not that strict on how you report them, if at all. But you gotta keep those records. Problem is, if you get $50,000 from a grant, yay, my life's changed today. But you didn't keep invoices, receipts, all this stuff to back up. Even if it's like, I'm gonna pay my bandmates $1,000. Get that buddy to give you an invoice for $1,000 with the date, because you need that. The CRA doesn't understand grants. I had a guy get a JSR, he got $55,000, and he didn't keep receipts. So he got taxed $55,000. He didn't have to pay a whole $55,000. He got taxed on the $55,000 for money he didn't get to keep. It's not like he spent it to go on a vacation, he spent it on his business. Hopefully it was fun, but he got taxed like it was just money he earned, which it wasn't. It was business expenses. And those should have balanced right out, and he should have had to pay no tax on them. But he didn't.
So if you get like 50K, does that immediately put you over that 30K mark and then you have to register for GST?
Good question. Yes, actually. Yeah. Weird. Thanks, JSR. You just made me have to file GST. Yeah. Yes.
So if you got a grant for that year,
Yep.
and then you filed for GST, do you have to like unfile for GST the next
Nope.
year?
You are on the GST train.
Stuck in,
But the good news though is that you can get refunds.
Yes.
If you're,
That is good.
yeah, so you'll get refunds after if you're not over that threshold. If you're still paying GST, you'll get money back.
For sure. Yeah.
How expensive are accountants like you?
That's my last point I'm getting to. I have one more and then I'm coming to that. I have one more and then I'm coming to that. And then you don't have to pay for me. There's other options. So, when do I file my taxes? I hope you've all filed your taxes, except you're good for now. All personal tax returns are due April 30th. Very important. For this upcoming year, you have your cutoff date when you stop counting that you earned money and paid things, December 31st. Then they give you 4 months to get your shit in a row and then file it. Now, if you are that sole proprietor, if you are probably everybody in this room, you get extra time to file. But there's no common sense in the CRA. You get extra time to file. You get until June 15th. Sweet, 6 extra weeks to put that off. No, if you owe money, even if you haven't put it together yet that you owe money, you still have to pay it by April 30th. It's not done. What's up with that? So, April 30th, do that. If you mess up and you miss it, you're not going to get penalties on being late till June 15th, but you were supposed to pay back here. So April 30th, go with April 30th. GST returns get their own filing date. Like I said, it depends on when you cross that threshold. Go in and change your GST date. Make it match your year. It's going to be way easier. How do I file my taxes? What should it cost? That's my list, my last point. And then we have a few minutes for questions. If you want to run away, that's cool. 3 tiers, free or cheap filing software. Nothing wrong with it. I wrote, it's DIY, fine in a pinch, way better than not filing. Do it. Filing something and missing something is way better than not filing. They will give you no mercy if you don't file. But if you file and you forget something and mix it up, you have a chance to fight for it. So this is TurboTax, Wealthsimple, Cloud Tax, H&R Block online. Very good for simple tax returns. Are most of you in here also employed by an employer? So you get a T4, right? That's just your employment income. If you have investments, you might get dividends, you might get a T5. This is all stuff the CRA already knows because your employer or who pays you your investment income or whatever, they've already done the work for you. They've created a T-slip, a T4, a T5, whatever. OAS, I don't know. And they've sent it to the CRA by February. So by April, CRA knows all your info. So what you're doing is you're paying these people, or not paying, just getting it together, it could be $0. You're paying them to just compile those files into one, put it in your tax return and file it. Great, done. But if you are a sole proprietor, you need to keep track of all those expenses. You need to keep track of your income. It's on you to report it. TurboTax isn't going to do that. I haven't actually done TurboTax or whatever. Maybe they ask you, are you self-employed? Did you make money? And if so, and you're doing TurboTax, make sure you read those very carefully. See if they can give you a printout of what your tax return actually looks like, and see if there's numbers on that T2125 form, because there should be.
I use TurboTax.
Sorry?
I use TurboTax.
TurboTax, great, yeah, and like I said, if you know what to look for, it might prompt you the right questions. It can work. That's great. So let's say it's $0 to $50, and I made that number up. You can go in person to H&R Block or something similar. This is better because you'll talk to somebody. These are not accountants. That's very important. They are not. And there's nothing wrong with that, but they're not specialists. And yeah, I'm not here to shit on H&R. They have some basic training on personal tax filings, and they will know what a sole proprietorship is, and that's all good. They will not know, caution, they will not know how your arts business works. They might say incorrectly that you can't write off something that you did legitimately use to, make your business make money. So, I had people, that use of office and home, right? So let's say you buy all your studio equipment, you work at home entirely, you're a producer, you're making hits. Let's say it takes up 50% of your little apartment. Yeah, that's a big number. You're trying to write off half of your rent, half of your utilities. Doesn't mean it's wrong. It just means you need to be able to back it up. You go to H&R Block and you're like, dude, I'm writing off half my rent. They're gonna be like, no, you're not. Like, you're an idiot. So anyway, you might spend $80, you might spend $100. At H&R Block, it's better than DIY. You're gonna get somebody in there, but they might not understand your business, and that's our last point, an accountant. I'm trying to specialize in the arts industry. It's what I'm passionate about. If I'm gonna be an accountant, I'm gonna be your accountant, because this is way cooler than like whatever else. And an accountant is someone you trust to help navigate your business, including filing your tax returns. It tends to be a long-term relationship. They will work with you to understand your business, identify and maximize tax benefits, and long-term financial planning. We had a quick email about this to differentiate your planning and my planning. They're not dissimilar. My planning is like, okay, I'm a sole proprietorship, cool, I'm Tiffany, and I made $100,000 last year. Should I stay as a sole proprietorship? Or should I incorporate and get corporate tax rates? That's the kind of planning I'm talking about. How do you get the money to you in the best way? The last thing is, I'd be your liaison to the CRA. So you get that JSR, and they come after you and they go, what the hell, man? What's going on? You owe us a bunch of tax. No, I'd fight for you, and I would, be sending them documents and be telling them what the JSR is and stuff. Last thing, you get what you pay for. So be cautious of anyone, including accountants, charging less than, 100 or 2 for a tax return that's not just T-slips. They take time. A relatively steadfast going rate is about $150 an hour for a CPA. I'm not a CPA yet, but I will be, and I work at a CPA firm, so that is kind of the rate you're looking at. A personal tax return that has sole proprietorships, let's say you have rental income or something, you might spend $300 to $500+. But is that going to be worth it for the relationship to you? What it's going to look like for your business down the road? That's up to you. There's other options.
It's a claimable expense.
It is absolutely a claimable expense. Thank you so much for saying that, because I forgot to write it down. Okay, we have
get a bookkeeper.
Yeah.
Sometimes they're $55 an hour. Get a bookkeeper.
Get a
Maybe.
bookkeeper.
They will save.
Maybe.
They will save your ass.
Maybe. Or they will sink your ship. Just trust your
Well, you gotta
bookkeeper.
find one
Just-
that, yeah.
You gotta find one. A lot of bad bookkeepers.
I have a great guy.
A lot of bad bookkeepers.
He sat with me for 2.5 hours to understand what it was that I did.
That's
I
good.
didn't charge me for it.
That's awesome.
That's a good bookkeeper.
Yeah.
Be your own bookkeeper,
Yeah.
is what I'd say. Because accountants are expensive. Sorry, we are. And and we are. But if you understand what your business looks like, then I understand what your business looks like. Then we can make that that fight as easy as possible, and you get the benefits of it. Educate yourself, and that's what you're here to do today. Thank you for coming to this, and sorry, I had a
It's
question.
all good. So I have an accountant I work with. I use QuickBooks because it's just, I hate keeping receipts.
Yeah,
So, but the question I have is I will go through and I will reconcile like what the hell the receipt's for. And
Great.
so if I'm out of town, my understanding is that I'm calling that travel. Like if it's like, the lion's share of what I'm spending on is travel. But my question would be like, if I have travel for fuel, if I have travel for food, if I have travel for accommodations, like how do I delineate that to my accountant?
it's really up to you.
Or does it matter?
It can matter. So at the end of the day, when you have your whole picture put together and all the numbers are in there, however they're classified, whether it's fuel or travel, doesn't make a huge difference. It's not like one's taxed differently than the other, unless it's meals and entertainment, then they are.
And that is it.
But basically, it's about having a cohesive story. I know it's like we're accountants and it's numbers, but it's kind of a story. Like if you're a business in here and you've lost $10,000 selling knit things on Etsy year over year over year, the CRA might come to you and go, dude, this isn't a business. You can't get a refund anymore. My point is, does it make sense that your travel is $20,000 and your fuel expenses are $500? Maybe not. Maybe just note which is each. In QuickBooks, it's super easy. You can create, like a travel control account and a sub-account. Travel fuel, travel hotels, travel meals and entertainment. So it's totally up to you. And then if you're working with an accountant or whatever, they might be like, hey dude, like we're just gonna shift this over a little bit. The story makes more sense this way. And maybe it depends on how you filed it last year,
Right.
just to keep it consistent. So it doesn't matter at the end of the day. It's how you'd like to see it.
Okay.
Yeah, but good question. Go ahead.
So the whole grant thing you were talking about earlier, like if
Yeah.
you receive the grant for a JSR,
Sure.
you were mentioning that like technically it is an expense, but it's not. So when you're filing, do you file it as an expense or is it just automatically filed as an income?
So when you get a grant most of the time from a reputable grant funding body, which some are bigger and some are others. By reputable, I just mean that maybe they have more structure in place. They are offering you a T-slip like you get for your employment. If you get a JSR, you're going to get a T-slip. I think it's a T4A or something. Anyway, you get a T-slip. There's an official record of you getting that money. That already goes onto your file as it is.
Income.
Okay.
Yeah, it goes, but it's in your return.
So you don't need to like put it in.
You don't need to enter the income
Okay.
because they'll already have a record of it.
Okay.
But you need to take that income that's on its own slip and there's a little box and it goes, I want to transfer this income to a T2125, which is that special form.
Okay.
You want to transfer that income from the grant, there's a special box, to the T2125, because once you're over on this one, that's where you can put in all the expenses. Otherwise, it's just income on its own. Scary, bad, not good. You want it over here so that you can write off things on that sheet against it. And now you can just submit that. You don't need to submit all your receipts to the CRA. But if you get a big grant, they will come asking. So that's when you need it.
Is that for, like,
No, I'm coming to you first.
that's for smaller grants too? Like 20, 15, 10?
Yeah.
You can like make sure.
It's always going to be income. It's always going to be income. I know like the Unison Benefit Fund one, which is another $2,500 no strings attached money that was given out during COVID. Lots of you might know that. I don't know if it's still available. They didn't give you a T-slip. So I'm not here to say don't report that income, but the government didn't know that you were getting that income. And if you did report it and you didn't have an expense to write off against it because it wasn't for any one given expense, you might pay tax on it. Chances are though, if you receive $2,500 for an emergency fund, you're probably not super taxable anyway. Sorry, you had one more question.
So, is there like kind of a limit on what you can use as expenses? Like for an example, buying a guitar amplifier instead of renting one.
Oh, yeah, for sure. That's a good question because you brought up one thing and we're like right against the clock. But you brought up a good point I'll touch on. when you buy something, and let's say it's more expensive than renting, that's something you invested in yourself, and that's called a capital asset. And that's, I just didn't have time to get to it today, but it's a capital asset. Basically, the cost of that, you can write off over time in little chunks rather than all at once. But no, it's there's no limit on what you could, if you want to buy a $100,000 amp and say that that's an investment for your business, it's your right to try to make that argument, right? But is it reasonable? Do you think it's reasonable? And is the CRA going to think it's reasonable? It's people really looking at this at the end of the day. So you gotta make a case. Sorry, last question.
Yeah, I just wanted to ask, so in a digital world, everything is electronically recorded,
Yeah.
bank statements, credit card statements. Do they hold the same validity as receipts?
Statements never did. Bank statements and credit card statements, while that is all I would ask you for as your accountant.
Because that's how I did mine last year.
Yeah, and like,
Off my credit.
I'm your accountant, all I want to see, at most, I want to see ideally your spreadsheet of all your stuff, because I'm taking your word for it. It's your job to back up those claims. It's my job to work with you to create that story and make sure everything's there, but it's your job to have the proof.
Yeah.
So statements are never enough for the CRA if they come asking.
Yeah,
The
I
receipts
had a number of expenses like directly to like login to credit.
Itemized receipts.
And like that's only been spent on music. Like, you know,
Yeah.
good to know.
Anyway, we should cut it off there. I know we're at the time. I just want to say thanks to Melanie again.
Oh,
and
thank
thank
you.
you guys all for being here.
Yeah.
We have handouts if you want.
Yeah, come on up.
Pretty much everything we've talked about is up here.
Yeah, I'd like to thank Music Calgary and Colleen Hoover in particular for giving us the opportunity to meet you guys today.
Absolutely.